Microsoft reported Q1 2025 earnings on April 30th, and it has been nothing short of a massive bull charging at full speed. So let's take a closer look. I have an exciting episode for you all today. I will start with the bearish numbers in the earnings release. I also want to talk about any of the bearish numbers, as well as anything else to keep your eye on. The earnings conference call already happened, so I will go over some of the key highlights, especially around Azure, the data center business, AI services, and Microsoft's continued capital spending on AI infrastructure build-out. It's Satya from Mistry Finance with more finance updates and news. Thank you for being here. And if you haven't already done so, hit that subscribe button and click that bell icon so you don't miss a thing about what is happening with your money. Now, Microsoft is part of the Magnificent Seven. On a personal note, I am not currently an investor in Microsoft, but I have had Microsoft on my watch list for quite some time. And after this earnings report, I am watching closely what Microsoft has to say, especially about its cloud businesses, AI, and its AI infrastructure build-out. First, at the end of trading on May 2nd, a full 2 trading days after Microsoft released its earnings, Microsoft has increased over 10%. Yes, that is a double-digit increase in 2 trading days. So congratulations to all those who were able to enjoy some of those nice gains. Next, let's look at the earnings press release that accompanied the earnings report. Now, I've gone ahead and color-coded what I consider some of the key points to discuss. From the top, Nadella stated that cloud and AI are essential inputs for every business. And for AI infra and platforms to apps, Microsoft is innovating across their stack to deliver for their customers. Also, Microsoft CFO Amy Hood stated that Microsoft delivered a strong quarter, driven by continued demand for Microsoft's differentiated offerings. I think these two statements taken together highlight that, in short, Microsoft does a lot of things for businesses in cloud and AI and are driven by Microsoft's innovation. And that has borne fruit in this blowout earnings report. So going over the numbers, starting with the top line number, revenue was $70.1 billion versus Wall Street's estimates of $68.4 billion, which is a beat of 2.4% and a year-over-year growth of 13%. Earnings per share was $3.46 versus estimates of $3.22, a beat of 7.6%, and a year-over-year growth of an impressive 18%. Operating margin also beat Wall Street estimates by 5.7%, and an improvement year-over-year of 16%. Now, jumping around a bit to the products and services business, Microsoft Cloud had revenue of $42.2 billion, which was an increase on a year-over-year basis of a jaw-dropping 20%. However, during the conference call, the CFO said that Microsoft Cloud's gross margin decreased by 3 points year-over-year, driven by its efforts to scale AI infrastructure. Server products and cloud services increased 22%, Azure 33%, and search and ads 21%. Now going back to the top, productivity and business software revenue was $29.9 billion, a 1.1% beat, and a year-over-year growth of 10%. Intelligent cloud revenue was $26.8 billion, beating Wall Street estimates of 2.4%, and a year-over-year growth of 21%. Personal computing revenue was $13.4 billion, beating analyst estimates by 5.8%, and a year-over-year growth of 6%. Now moving over to the income statement, while overall total revenue increased, Microsoft broke down revenue into product and service and other. Now, while the revenue for products declined year-over-year by 10%, at the same time, the cost of revenue for products declined by 30%. This translates into a service and other revenue increase of 22% and cost of revenue increase of only 33%. Looking at gross margins, it increased by an incredible 11%. Operating expenses increased 2%, and during the conference call, Hood said it was due to lower than expected, quote, cost efficiencies as well as investments that shifted to Q4, end quote. Moving over to the balance sheet, Microsoft is showing a mountain in total cash and equivalents of $79.6 billion. And moving over to the cash flow statement, we can see that Microsoft repurchased $4.781 billion of common stock and paid out $6.2 billion in dividends. So congrats to all those investors. Now, if you're looking to quickly stay on top of financial news, subscribe to my channel for free. Daily episodes of the Finance Update Daily. Each episode is under 2 minutes with the top 5 or so stories. Now, during the conference call, Nadella focused on data center infrastructure, capacity, and use case. Nadella said that Microsoft continues its build-out of data center capacity and said that in Q1, they opened data centers in 10 countries in 4 continents, a truly global operation. He said that model capabilities are doubling every 6 months. And I was excited to hear that there were 20% reduction in time to getting new GPUs operational. AI performance increased by 30%. Also, Microsoft processed over 100 trillion tokens in the quarter, which was up 5-fold year over year. Last month alone, they said they processed 50 trillion. Now, moving on to the full year outlook. During the call, Hood said that headcount increased by 2% year over year, but was down from the prior quarter. Also, Hood stated that the weakening dollar in April caused the expectation of FX to increase in total revenue growth by 1 point. Within the segment, Hood said that for the full year, Microsoft expects FX to increase revenue growth by around 1 point or less within the segments of productivity and business processing, intelligent cloud, and more personal computing, as well as a less than 1 point increase in COGS and operating expense growth. Sticking to the full year guidance, Microsoft Cloud, scaling of AI infrastructure to cause CapEx to increase and gross margin to decline year over year. Intelligent Cloud is projected to have revenue growth in the low 20%, and Azure revenue growth is in the mid 20% growth. The on-premise server business revenue is expected to decline by mid-single digits as customer shifts cloud offerings. Regarding analyst questions, an analyst asked about whether Microsoft was walking away from some data center commitments. CEO Nadella, in short, dismissed the claims and said that changes to leases and builds is part of the building process and data centers, and there's nothing out of the ordinary. Nadella also mentioned power constraints, and Hood added that timing is also a part of the lease changes to help pull forward the infrastructure build out faster. An analyst also asked about the demand for cloud migration. Nadella said that he thinks about 4 big trends that are happening in cloud at the same time. First, classic data migration. Second is good data growth, which refers to high quality, relevant, and well-managed data that is collected, stored, and used. Third is native cloud growth, which is essentially a software approach of building, developing, and managing applications in the cloud environments, which allows for scaling and flexibility based on a business's changing needs. And fourth is AI workloads. Nadella said that these relate to one another. Well, that is it for this video. I hope you found value in it. If you are looking for more finance news and updates, don't forget to check out some of my other videos. Thank you so much for watching. I'll see you in the next video. Bye bye.